Okay, let's dive headfirst into today's blockbuster information, and we are joined by Nancy Vanden Houten, I apologize. Sorry about that. She is a lead economist for the U.S. macro team at Oxford Economics. Thanks very much for joining us. I certainly appreciate it.
Thank you for having me.
So let's kind of dive right in, because if you look at it, higher wages, better employment numbers, inflation under control, nice trifecta. What is your take, the overall reaction to this information?
Well, there's no way to dismiss this as anything other than a pretty solid report. We don't like to, hang our hats on just one monthly release. Sure. The data can be revised, upward, as was the case with this report for job growth the prior 2 months. Previously, we've seen a lot of downward revisions. And there still are other measures that we look at that suggest, that there's some, weakness in the labor market. But again, this was a good report, and for those who were fearing that the labor market was sending a signal that a recession is approaching, I think this report relieves those fears.
If there is a hint, and I don't want to gum up the works, but manufacturing was off. That is the one area that lagged behind. Your thoughts on that? Right.
I mean, that has been the case for several months. If you look at the manufacturing sector for the whole year, job growth has been negative. We do think, though, that we will see a turnaround with the interest rates coming down. We expect that business investment will start to increase, and that we will start to see a recovery in manufacturing jobs.
So, Nancy, pick up on this information, where we are now, and looking at the economy, how much it really has stabilized, improved over the last half a year plus, and we're heading in the final month of the all-important U.S. presidential race. What kind of impact do you think these new figures are going to have on this race for president? What will the two candidates do? How will they try to use this information?
I think that, at the margin, you could say that it might help Vice President Harris. She's part of the current administration, and, certainly good news is better than bad news on the economy in the final stretch of the race. And also, I would point out that, early voting has begun and will, gain some momentum in many states over the next several weeks. So this report is probably more important than the one we'll get right before the election. But it's a very close race. There's probably not many voters who've not made up their minds. So I think any impact is small and at the margin.
I think everybody really wants to know what's going to happen when the Federal Reserve meets again just after the U.S. presidential vote. Your thoughts? They made a bold move, bumping up, reducing the rates by 50 basis points last month. A lot of people wondering, could it be a quarter? Will they hold off? Your thoughts?
Yeah, we're looking for a quarter-point move. The signal from the last FOMC meeting was that the Fed is very much focused on the labor market as it sets policy going forward. Inflation is not completely returned to target, but they have a lot more confidence that it's going to get there. I think that they essentially, told us they'd lower rates another 50 basis points over the balance of this year. If the labor market data, came in line with expectations, you might make the case that this report was a little bit stronger than implied by their forecasts. But again, we don't want to, place, everything on one report.
Absolutely.
And, and again, let's remember that they're not lowering rates to give the economy a boost. They're lowering rates to remove restrictive policy and to normalize policy. So we think they'll continue on the path of rate cuts, but at a more measured pace.
Yeah, I think that's a good point for our international viewers, that the decisions that the Fed makes are not done by politics, they're done by numbers, and everybody wants to keep politics, well, almost everybody wants to keep politics out of them as much as possible. But I want to look at the trends, where things stand, because in doing some research before I came out here, I looked back, and 3 years ago, I forgot how high the unemployment rate had gotten, and the fact that they were able to bring this down over a period of time. It looks like there is going to be a soft landing, and of course everybody is second guessing the Fed. Should they have acted earlier? Will they act in a more robust fashion moving forward? What do the numbers tell you?
I think that the data suggests that they are going to be able to pull off a soft landing. Inflation is coming down and approaching their target. We've seen some rise in the unemployment rate, but it's also important to look behind the causes for the rise in the unemployment rate. What we're not seeing is a big increase in permanent job losses. A good chunk of the rise in the unemployment rate over the last several months has reflected more people entering the labor market, and that we view as something positive.